Good afternoon and welcome to the Resiliency and Mitigation Council for Wednesday, August 6th. We are going to go ahead and turn it over to do roll call and then we'll get started.
All right, council members, please indicate that you are present when your name is called. If you're an alternate, please state your name and the name of the council member that you are representing. Randy Chevalier. Here. Laura Curtis. Carmine DeBonis. Carrie Edwards. Jake Enya. Here. Michael Newman.
Here.
Jake Rhodes.
Here.
Tom Savage. Tom Torres. Here. Maria Aylward. Here. Thanks.
All right, thank you so much. We're going to get started. I'm going to read a few of the meeting logistics and then we're going to dive into our presentations. We have a pretty robust agenda today. We will get through all of the presentations and if time allows, we will have public comments. This meeting is being broadcast online and is being recorded. The recording and associated meeting materials will be posted on the council's webpage. Comments in the chat will not be recorded. For council members online, please use your hand raise feature to speak. Except for public comment periods, only council members online will be able to unmute themselves and turn on their camera. If public comments are taken, each speaker's time will be limited to provide everyone who wishes to comment the opportunity to do so. To comment, please fill out the slips in the room or there is a Google form online if you wish to comment. So with that, we are going to move directly into our presentations. If you're online, just hold a bit. We're having a bit of a technical issue. We'll get that resolved and get back in just a second. And then we will start with our first presenter.
I'll get the timeout feature on it or something.
So will it pop back on?
Oh yeah, it just needs a second to turn on.
Okay.
There it goes.
Not automatically turn because you know we were scheduled to be 3:07.
Oh, there's one here.
So we invites at 3:07.
It was on this one that Debbie got.
Maybe changed it, didn't update it.
Okay, there we go.
Oh, good. I was just hoping they didn't shut us off. Oh, there it goes again. Oh, here we go. All right. All right. Sorry about that. We are going to get started now. We have with us today Mike Feltz. He's going to be presenting from Advanced Fire Defense. Mike, if you just want to introduce yourself to the group and then you can go ahead and start your presentation.
Yeah, definitely. So first off, I just want to say thank you so much for the opportunity for being here to speak. I'm super excited to tell you who we are and what we can offer. And hopefully we can create a partnership so we can help you with the council's mission. So if you go to the next slide. So basically, I'm Mike Feltz. I was born and raised here in Flagstaff, Arizona, 44-year resident of Flagstaff. I'm a fire captain paramedic for the city of Flagstaff, and I've been with them for almost 19 years. I also operate as an acting battalion chief for them as well. Total in public safety in Northern Arizona, it's been 26 years for me as a paramedic and then for the fire department. I also am licensed as a contractor for both remodel and repair for residential and commercial structures. So I have a really great knowledge of the building process. I'm the co-founder of Snuff Wildfire Tech. I don't know if you've heard about us, but we are currently in a global competition through the X Prize for a satellite race for early detection of wildfire by satellite imagery. We were one of 20 teams out of almost 350 across the world to make it through the first round, and we're still going. With that whole program, I worked as the chief of operations for Inversat, which is the satellites, red flag defense, which we're going suborbital with our camera technology. You start seeing it over the Coconino National Forest within about 2 years. And then we also have a ground-based detection company. I'm also co-founder of Mountains 11 Innovation Studio. So we help people and inventions for fire, medical, and environmental get it to a proof of concept. And then the owner of Advanced Fire Defense, and that's what I'm here to talk to you about today. So go ahead, next slide, please. So basically, I think it's really important for you guys to understand how our business started. So as you can see, we're really vested into helping with the wildfire side of things, especially up in northern Arizona, where it's our number one risk. So for me, it all started with the pipeline and the tunnel fire. I had the opportunity to respond directly into the tunnel fire, where we lost 36 homes out there. I was there as a single resource in the Tahoe. And what it really did for me was gave me the opportunity to see how the fire flowed through the neighborhood, how it impacted structures, how the ember wash happened, how the ground-based fires happened. And in seeing that in our community, we really figured out that we needed to step up and do something. The Christmas tree side of it is one of our amazing inventors on our team burns a Christmas tree every year for New Year's. This year could not get a Christmas tree to burn. After backlogging, we figured out that there was enough fire retardant in the tree to keep it from burning, and that's how we created our business. So next slide, please. So basically, we created Advanced Fire Defense to give empowerment to the community and peace of mind that they're ready for wildfire. The problem with wildfire previously is we're dependent on the fire department. Nobody has a way to get prepared, and we brought that to our customers. So again, we're an Arizona-based company with a real understanding of regional specific needs and solutions for wildfire prevention compared to the other out-of-state companies that have come and presented to you so far. We have a real understanding of the state of Arizona wildfire. All employees that work for me are either current or retired firefighters, and they all have firsthand experience of what it's like to be on a wildfire in northern Arizona. One thing I want you to remember is this complex problem that we're looking at doesn't always need a complex solution, and that's what I'm bringing to you today. Next slide, please. So basically, here's how the company works. So we're certified as NFPA wildfire mitigation specialists. We come out to your home, we do a full boots on the ground inspection. So we hit everything around the structure, basically from a firewise standpoint. The home itself, the 5 feet around it, 5 to 30 and 30 and beyond. We come up with a total protection plan on what that looks like in order to protect your home. And then we come up with a treatment with the Komodo fire spray, which we'll get out to you in just a little bit. The Wildland Firefighter Foundation logo, we like to give back to our wildland firefighters. So every money, like dollar that we make, we take a percentage and we put it towards that organization. So next slide, please. So basically, the easiest thing for our company is we hit all 3 areas of fire. So from the 0 to 5 foot mark in our inspection process, our number one concern is keeping the embers from going into the house. So I know you guys have had a ton of these and you understand the ember wash and the ground fires. The second part of it is keeping any direct flame impingement off of the home, and we can do that with our Komodo fire spray. The rest of it from there on out, we can treat the property to keep the fire from moving. So we can create fire breaks, we can keep the fire from having ladder fuels and crowning. And then on top of all this, we also give the information to the homeowner through our inspection process of what needs to be mitigated from a tree spacing standpoint, from the embers, from the openings of the house. Go ahead, next slide, please. So here's an example of our inspection sheet. So basically, we've been serving as a field resource for some insurance companies, which we'll get into. But we can provide a ground-based risk evaluation of properties in the wildland urban interface. We really streamlined our inspection sheet. It's about 36 pages long to be there for the insurance company to provide all that information. So the very first part of it gives you everything you need to know about the structure. We talk about what the roof is made out of, what the siding is made out of. If it has open or closed eaves, where's the nearest water supply, is the address visible? Then the rest of the inspection goes through for the homeowner as an educational side of things, what they need to do on their home, what they need to do around the 5 feet. the 5 to 30 and the 30 and beyond so that they can mitigate it. What's really great is at the end of our inspection from an insurance standpoint, we give a complex readout or a general impression to assist in the underwriting process of insurance to tell them if this house is solid for wildfire or not. Our process, I created the form. So as we do work with different insurers, we can adjust it to make it fit their needs to help them out through their underwriting process as well. Next slide, please. This is our preferred contractors list. So we understand that not all homeowners can do the work that we show on there to get it mitigated. So we provide them after the inspection sheet with the preferred contractors list. And this is kind of a revolving list for us. So if you don't show up on time, if you don't do a good job, then we kick you off the list and we put somebody better on there to be able to provide that service so that people can get the work done. One thing that we found out in Northern Arizona is people get the recommendations how to harden their home and then nobody shows up and they're just kind of stuck. So we can kind of take care of that problem with our revolving contractors list. Next slide, please. So Komodo. So we became applicators and distributors of this Komodo product. Komodo is a completely environmentally safe spray retardant that you can basically spray on anything, and it makes it 100% fireproof until it receives about 3 inches of moisture. The video on the right, as you can see, it's coming out blue. That's PG&E out of California. You can dye the spray retardant so you can see where you're applying it, and then it fades away after 5 days. On our application of it, you can't see it. We keep it clear because you can see it moist on the trees or on the house or whatever we spray it on. PG&E has been using it for the last 3 years on their power poles, and they've had a 100% success rate of not losing one. So if there's a wildfire 10 miles away from the power poles, they respond with their own Type 6 engines that are full of Komodo, and they start treating the power poles most affected out. Komodo was based out of Southern California. We ended up finding it as a product and thought it was an amazing solution and brought it here as the first business concept to pre-spray properties for wildfire. It was used during the California wildfires by private contractors for insurance companies. They sprayed it on 400 homes. 40 of those had direct flame impingement and all 40 stood. Being a firefighter and trying to sell this, it's very interesting because people are like, there's no way this stuff works, that it can be true. We have tried to light everything on fire and have totally debunked the whole thing. It's pretty amazing stuff. So next slide, please. Oh, to pop back on it one more. San Diego Fire's using it. Cal Fire's using it. They're dropping it out of 5 air bases currently. It's kind of hitting the California market and working its way across, and we were the first to bring it to Arizona. So for us, basically Komodo can be sprayed on anything to harden the home itself. So we can spray it directly on the home. It can be sprayed on trees, plants, fences, decks, basically anything that can catch fire, and it's not harmful to anything. It's good for people, it's good for pets. So like we'll spray if there's, a tree that's 5 feet from the home, we'll spray the whole tree and we'll spray it up 10 feet past the roof line to make sure that the fire can't impede on the home. If there's a fence that's connected to the house, it's wooden, and that's going to be a source of lighting the house on fire, it's as easy as spraying the fence and we go away. So like I told you, we really are prioritizing hardening the immediate home at 5 feet, and we can use the Komodo product there. The rest of it, like I mentioned earlier, we can spray it on anything to keep fire breaks out, to keep the trees from burning. One thing to think about, which is a pretty amazing solution, is for existing structures, it's an immediate solution. So like taking out one pine tree, sometimes up in the city of Flagstaff, can cost $5,000 to $8,000 because you have to crane it. We can spray it and it makes it fireproof. And they can work towards, at some point, having the money to get rid of it. The other problem we run into is people love their pine trees and a lot of them don't want to get rid of them. So this is a solution that we can do to spray it. I know you guys had an amazing presentation from James Hardy. And I think, it takes an army to be able to take care of this problem. And in a new home buyer's process, that's a great remedy. But for people who can't change their siding currently, it's going to take a while. It costs too much. We're an easy and effective solution to fortify your home immediately right now. So we've been working with contractors in Flagstaff to spray homes when they're in the stick frame, and it makes the entire stick frame structure completely fireproof, and it never receives the 3 inch of moisture to degrade it. So it makes the entire structure fireproof. Here currently too, in the near future, the same company, Komodo, is coming out with a 10-year fire resistant paint that you can paint on the exterior of your home. It basically kind of bubbles and it keeps the material from burning. Right now they've been using it in the Asian market, and they've been painting the inside of lithium battery cells. And if the lithium battery catches fire, it stays within the cell. It's that effective. Next slide, please. So it's just a video just showing you the debunk of the Komodo fire working or not. So the most flammable thing around us are these pine cones. As you can see, the one on the right is not treated, and it took just a little burst with the blowtorch, and it started fire, and it'll continue to burn. That one is treated with the Komodo product, and you can see we're holding the torch, holding the torch, holding the torch. It'll char, but it'll never burn. You can see the fire's out. This one burns all the way to the ground. So if you do have direct flame impingement on a home, it will char the surface that it's burning up against, but it'll never continue to burn. Basically, how it works is the material crystallizes over the outside of the material, and it keeps the material from off-gassing. And because it doesn't have an off-gas process, it won't burn. So next slide, please. So we can apply it in 2 different ways. So the one on the left, the video usually runs, but it's not going to run this time. That's our setup. So we have a pump and a sprayer, and we just come out and we can treat the property. On a normal treatment, it takes us about 20 minutes to roll around an entire house. If we're doing it emergently, we can do about a 4,000 square foot house in about 3 to 4 minutes, and then on to the next one. The products on the right are also products that we sell. This top one on the left, it's called your Professional Home Protection Kit. We've been selling that to people around our town. The Komodo product sometimes leaves a powdered sugary looking residue, so not everybody likes it on the side of their home. If they don't, then we can provide them with a home protection kit. That kit for $1,300 covers 2,000 plus square feet, and you keep it in your garage. It's a rolling bug sprayer. You come out, you spray your house down in the event of a ready, set, go. Keeps your house protected. If the fire goes through, it washes off with soap and water, and we provide you with a refill. So next slide, please. So we've been outreaching all over to Northern Arizona for community outreach. So we've been involved with the Coconino County Boards of Supervisors, direct contact with the Flagstaff Fire Department, the Highlands Fire Department and their Bear Jaw crew. They actually have it on their UTV right now and are using it in real time just to test it out and see what they like. They've had the opportunity to spray it on small brush fires on the highway, and they've sprayed it on the guardrail wood, and it's just protected the wood so that ADOT doesn't have to protect or replace the guardrails. We've been working with the Forest Service, the City of Flagstaff Chamber of Commerce. We just pushed into all the Flagstaff realtors, or a majority of the Flagstaff realtors, and we're becoming a part of their new home buyer process. So when you get a home inspection sheet for things that you need to do for your home to make it good, we also provide a pre-wildfire inspection to give them the information on how their home needs to be set to be ready for wildfire. The other thing it gives them too is a clean sheet or a clean bill of health to give to insurance for them to be able to obtain insurance to get a mortgage. We're pushing into the Prescott realtors. We have a big meeting here in the next couple of weeks with over 100 of them as we kind of start to spread across Arizona. We've been involved with the HOA communities already. We've been spraying in Pine Canyon a lot, protecting all those homes. A few in Forest Highlands, and then like the Anasazi Ridge area. We're working with APS to protect their power poles, just like they're doing for PG&E. BNSF, we're not only protecting wooden bridges with them, but also providing them kits that they can spray before they weld on the tracks to keep the welds from burning away. We're involved with a bunch of local charities, and then Cap Radio that just pushes us like crazy. So next slide, please. So basically, I just wanted to tell you how we fit your mission. So basically on the risk identification and mitigation, Our inspections and defensible space planning directly reduce wildfire exposure, aligning with your goal to lower property loss risk. Our verified contractor network and our variable of solutions we can do ensures that the mitigation work is completed to the highest standards, supporting interest in scalable, community adaptable solutions. So what I mean by that is we can give the homeowner options. So it's not something that we come in and we do an inspection and it's $50,000 worth of work with thinning the trees and changing the siding and changing the roof. There's things that we can do for an affordable cost immediately right now, and they're set and protected. So our Komodo fire retardant application, it adds a layer of protection that insurers can quantify, helping justify coverage and potentially lowering their premiums. And then community empowerment was like one of the biggest things as to why we got into this. Our outreach and education efforts foster resiliency, echoing the emphasis on local strategies. So next slide, please. So we've already been working with insurance companies, and we've actually been very successful over the last few weeks, which is big because we started our business at the beginning of the summertime. So we just had a really amazing opportunity to link with Conservation United to provide high insurance to the Lake Mary Country Store. I don't know if you guys know about the Lake Mary Country Store, but they're a family-owned business. It's everything that they have, and they've been without insurance since last October. They did about $50,000 worth of tree mitigation and still could not get insured. So we teamed up with our inspection process with Conservation United, and within just a couple of days, we were able to get them fully insured through Lloyd's of London. So Robert Johnson is who we worked with out there. One thing that was really amazing with this process is it was Lloyd's first insurance written into the state of Arizona for wildfire. They've only been writing in California underneath the California Wildfire Act, and we just opened it up into the Arizona market with our process. So next slide, please. So this one too, so we just went out to start an inspection on this home. This was in the Parks area. As we're driving in, this smoke plume up here was pretty prevalent on the drive in. So we showed up and the gentleman was like, "Hey, what is that?" And I go, "I don't know, it looks like a real wildfire." So he goes, "Well, what would you do?" And I said, "Well, I think we should treat your entire home." So this fire was 1/8 of a mile away from this gentleman's home in the southwest direction where all of our fires come from the prevailing winds. So as you can see, we treated the house with Komodo. That was his home. He did not have insurance since last October. We got a hold of Lloyd's and we had him insurance within like 2.5 days. Lloyd's got it with a high risk out there, or provided him with this high risk insurance. Next slide, please. So basically, in conclusion, the wildfire insurance crisis demands more than reactive measures. It requires bold, proactive partnerships, which is why we're here. We can provide proven boots on the ground solutions that align with Resiliency and Mitigation's Council mission to protect Arizona communities and restore insurance stability. I want to back up just a touch. On our original inspection, I think it's important that you guys have an understanding of what we can provide on the boots on the ground. I understand there's a place for AI and there's always going to be a place for it. We just had a house that we inspected that was built to these super high energy standards. And it actually is such high energy that they're worried about moisture building up on the exterior of the home. So there's a vent system on the outside of the sheathing to the actual outside of the home to the, totally stays in the brain part. So there's this void in the gap that's made to have airflow through there. We found it by literally getting on our hands and knees and looking up below and going, hey, there's going to be embers that push into here. So we were able to make that safer by putting ember resistant screens down below, and it was still able to vent like it was supposed to. I'm not saying that there's not a place for AI, but I think there's going to be small things like that are missed as it continues to grow, and we can provide a better solution for that. So basically, by integrating our inspection services, verified mitigation work, and Komodo fire retardant applications into the insurance ecosystem, we can reduce risk, we can empower homeowners, and we can make coverage both accessible and sustainable. Together, we can redefine resilience, not just a response to disaster, but as a standard for prevention. It's a pretty easy thing to get people prepared. Next slide, please. So basically, as I leave with this, I just want to leave you with a couple proposals for possible strategic partnerships that I think you should be aware of. So the first one is to embed mitigation into underwriting. So if you could integrate our inspection and mitigation assessments into the insurance quoting process, it enables insurers to offer customized coverage and potential premium reductions up to 10 to 20% for properties with verified wildfire risk reduction. We're already doing that with Lloyd's of London. Use our boots on the ground expertise to streamline risk evaluations for high hazard clients, improving insurability and retention. It also quickens the underwriting process as well. And then looking towards a statewide incentive program. So collaborate with insurance and council to launch a statewide discount program for homeowners who complete verified wildfire mitigation. You can utilize our contractor network and promote a fire retardant application to ensure consistent insurable standards and empower communities to take proactive steps while making insurance more accessible and affordable for them. So this will reduce wildfire-related claims and losses as we can show a guaranteed reduction in risk, increase insurance availability in the WUI zones, which we've already been able to prove that from Lloyd's in London. Strengthen community resilience and council's impact. We've done this a lot as we've started to spread where we're not just doing single properties, we're doing whole communities. And this is a scalable model for other high-risk regions across Arizona. We could really be a model. We were just contacted through California looking at our system on how we've been successful with insurance through Lloyd's and wanted to know how we're doing it and how we could assist in California. So next slide, please. So basically, let's build resilience together. What would it take to make verified mitigation a standard in Arizona? Who do we need at the table to make this happen? And my company is ready to pilot this and let's move forward together. You guys have any questions?
Thank you, Mike. We are going to open it up for questions from the council members only.
Okay.
First, let's start with anybody online. Is there any council members online that would like to ask a question or comment? Mr. Newman.
Hi, apologies. I'm driving to pick up my daughter from camp, so apologize for the noise in the background. I have a comment. First, thank you for the presentation. Really appreciate the work you're doing. I do want to highlight one general concern we have with retardants is it is an active mitigation, which is to say it needs to be done in front of the wildfire. And it can sometimes lead to a little, or the worry is that it could lead to some complacency by homeowners. Oh, I don't need to do the more passive mitigation actions like the defensible space, like the home hardening, because I've got this easy button that's going to come and save my home. Mike, I think you absolutely made the point. It's not either or, it's both. But I do want to highlight the importance of making sure homeowners are taking action, as many actions as they can to reduce the risk of their home igniting in a wildfire. And then if they want to do retardants on top of that, let's have that conversation, but it's not an instead of. And I don't think you're saying that. I just want to highlight it for the council.
Yeah, Mr. And I got a comment for you on that one as well. So we did take that into account when we put the business practice in there. And one of the things that I think helps with that is, number one, our preferred contractors list, which does make it easy for people to get the work done. And then number two is, I didn't mention this in my presentation and I apologize, but we also stress a re-inspect. So after we come and we tell you what needs to be mitigated on the home, we stress for you to get the mitigation work done, and we come out and we re-inspect the home to give you a clean bill of health or a clean inspection sheet to be able to send to your insurers. And if that statewide implementation of a 10 to 20% discount where people got credit for taking those measures, I think that could be a really amazing opportunity to get people motivated to go in that direction. But I really appreciate your comment. Thank you.
Anyone else online? Seeing none, I'll move to questions. Kate.
Yeah, just a real quick question. So You know, it sounds like while you do inspections in a variety of different areas, including the defensible space, you mentioned how you were kind of looking up in the walls. Most of the the applications you use are the Komodo. So, I mean, I definitely hear the, you know, it's an and not an or, but at some point I feel like stacking all of these potential things on top could be a potential cost concern. And so I wonder, you know, could you talk a little bit about how the cost, I mean, you mentioned a little bit about the replacing all of your siding is potentially expensive, but spraying is less. Could you talk a little bit about how, you know, the various different things you can try to do to mitigate damage can be different, cost different things?
Again, yeah, hopefully I understand it correctly. So, you know, when we're actually looking at the home, we're looking for the easiest thing. So like the number one is ember prevention, right? There's not typically a huge cost associated with the embers getting into the home. So it's 1/8 inch mesh screening on all your attic vents. It's making sure that in the soffits and any place that an ember can get in is sealed with caulking. It's the seals around your doors and your garage doors from pushing in. Not a super high cost need there, right? So once we've got the embers taken care of, then the next thing is a ground fire. And what we really try and do is just to keep direct flame impingement off of the home, right? So if there are things that are going to do it, we always provide the recommendation from a Firewise standpoint on what needs to be mitigated. But then we work with the client for an immediate now solution. So like for us to spray, basically it's about $1 a square foot. So if we were to do a fence 5 feet out, it's 5 feet. It's like $25 for us to spray the fence line out from your house, and it's protected now. As they look and they work for a solution later as a recommendation for putting in a metal fence or a fence that's not going to burn. The trees are the same way. So the trees cost around like basically $100 per 4 trees. So $25 a tree versus a $5,000 to $8,000 removal of that tree. It's a really great preventative solution that we can do now, but still with the education to the homeowner of the tree should be removed. Like it is a threat, but at this point right now, we can take the threat away until you can get there. Does that answer?
Yeah, just a quick follow-up, because
Yeah.
kind of on the same topic, I can also understand how, you know, entirely replacing your roof with like a metal roof might be a more permanent solution.
Yes.
I don't know if I heard you talk about kind of the lifespan of the retardant. Is there like okay, you spray it, how long do you have with the benefits?
Yeah, so it lasts until it receives 3 inches of moisture. So, you know, like in the Flagstaff side of things, it would be an annual spray. So think about it like the working man. So we show up at the beginning of wildfire season and we get your property set and ready to go. I will tell you the 3 inches of moisture kind of changes depending on where you think about where we spray it. So if it's on a vertical wall and it has an eave, it's going to take a really long time before it actually receives 3 inches of moisture. That's a lot. But on the base of a tree where snow builds up a foot, probably the bottom 1 foot would need to be resprayed. However, fire crawling a foot up a tree isn't necessarily going to be a big issue as well. So on a flat horizontal surface, especially for up there, it's 3 inches of moisture and it needs to be resprayed. The home protection kits that we provide, those are good. They're in a powder form so that they stay forever. So if the home protection kit is in your garage, it's good until you need it.
Okay. And just one. You mentioned that you kind of worked as a field resource for insurance companies. Is that just kind of describing the work you talked about with Lloyd's?
Yes, sir.
Okay, thank you.
Yeah, so we just have been working directly with Conservation United along with Lloyd's of London. And we provide them our insurance sheet, which has helped them speed up the underwriting process, along with giving them all the information that they need to know if it's too high risk of a property or if it's had the correct mitigations where they feel comfortable moving forward.
Any questions of the panel in the room?
Yeah, Mike, thank you for the presentation. Really interesting. They have solved our problems, but Mike, so you talked about, I want to sort of explore your role with the insurance companies. You guys use Lloyd's of London, but what kind of relationship or conversations are you having with sort of more local insurance providers? Yeah, maybe in Arizona, but also maybe across the country, if you know, that kind of stuff.
Yeah, so to be perfectly honest with you, it's a very, very new relationship. We just started learning about, the Coconino County insurance crisis issue and started attending those meetings. When the Lake Mary Country Store came up, it was only 3.5 weeks ago. I had a very, very difficult time finding general liability insurance for my company. I went through over 50 underwriters and ended up meeting Robert Johnston out of Conservation United. When the Lake Mary Country Store came up, I called him and was like, hey, do you want to change history? And let's figure out how we can make this happen. So we started our relationship 3.5 weeks ago, 4 weeks ago, and we've gotten 12 people insured in the high risk areas at this point. He's connecting me with what I call the next layer of insurance down, which would be Chubb, Cincinnati, to kind of do that same process through there. Lloyd's was very interested if we would expand into California because of all the underwriting that they do in California. And we haven't networked with other insurance companies across the city of Flagstaff yet. We kind of wanted to present here and see what your thoughts and what your ideas were before we kind of approach that next market.
Any other questions?
Just one more question about the toxicity or lack thereof. Can you talk about how it's been tested? Has it been tested by EPA and
Yeah,
that
100%.
kind of stuff?
Yeah, so it has the highest USD rating that it could possibly have. In the back of the pamphlets that I set on your desk, it has the entire material safety data sheet on the back. It'll be the very last pages in the actual papers back there. I wanted to supply you with it. Totally environmentally friendly, 100% safe, and they use it in California. So it has to it has to meet super high environmental standards over there. If there's anything else that I can provide you with directly as far as documentation, let me know and I'll send it to you.
Thank you, Mike.
Yes.
I think we have time for one more question.
No.
Okay, all right. Thank you so much.
Yeah, no problem. Thank you so much for your time.
All right, we're going to move into our next presenter. We are lucky enough to have Gary Buck here from Hawaii Insurance Division. And he is going to introduce himself and talk a little bit about Hawaii and what they're doing in this space. Thank you, Gary.
Sure. Thank you, Lori. Hi, I'm Jerry Bump. I'm the Chief Deputy Insurance Commissioner. Now we get to dive into the really exciting world of insurance regulation in Hawaii. Not quite as exciting as a blue spray that can protect your home. Deputy Director Munn had asked me to kind of give an update on our homeowners market, our what's going on with wildfires and legislation, and then our FAIR plans. So if we can move to the first slide. This is just kind of a broad overview of our current homeowners market. You can kind of see where our premiums are at. We actually have on a per $1,000 basis, we have very low rates. We don't experience extreme weather events too often. We don't have hail, we don't have freezing cold, and so forth. So, but our home values are quite high, so that obviously will translate to a final high cost in insurance itself. Additionally, in Hawaii, you have to buy 2 policies typically. Your mortgage lender will require you'll have your standard HO3 policy or homeowners policy, and then you'll need to also purchase a separate hurricane insurance policy. Depending on where you're at too, you'd have to purchase a flood insurance policy through the National Flood Insurance Plan. As far as legislatively or from a regulatory standpoint, insurers who are authorized to do business in the state must file their premium rates just like every other state. We review those to make sure that they're charging an appropriate rate to maintain their solvency so they can pay their claims, but also ensuring that those rates aren't discriminatory or excessive. Lastly, and I'll touch on this in a future slide, one of the big things that we've been dealing with actually is it wouldn't necessarily fall under the resiliency and mitigation umbrella. It's although you probably could draw a correlation to it, but it's our condominium market. You know, as the picture shows in the slide, we have quite a few condominiums throughout our state. A number of residents live in those. We've been experiencing astronomical increases. It's more related to the global reinsurance market. You know, that reinsurance market has been suffering from one disaster after another, and that tightened up the supply of reinsurance, which has made it very difficult for our condominium associations to get their coverage. But I'll talk a little bit more about that and what took place over our last legislative session and the fixes that we've been looking to implement to help stabilize that market. If we can move to the next slide. So prior to 2 years ago, in fact, we're coming up on the second anniversary of our largest wildfire event that we've ever had. But prior to that event, we really, to be honest, we never had concerns about wildfire, not on a mass scale. Now, our Hawaii Emergency Preparedness, agency, they've done studies, they've identified it as a risk, but we've just never had an event where it kind of put it on, not only on, the typical resident radar, but also even on the insurance side. That's all changed. With that said, we still feel we do have a risk that there's much more attention being paid to it now. Our type of wildfire would be much different than, I think, we do have forests, but it's not of the same nature. And even the Maui disaster was sort of a combination of forests as well as, agricultural land that was unused with brushlands and shrubs, where the land itself was neglected. Many of the western side of each of our islands has severe drought and then vegetation that had not been maintained. So there's a great attention being paid to that now. Just going over this slide a little bit. So the August 2023 wildfire, destroyed over 2,200 structures in Lahaina, which is on the west side of Maui. This rapidly moving fire caused 102 fatalities and $5.5 billion in total damage, but an actual economic impact of $16 billion, considering tourism and is our main economic driver in Hawaii, and obviously this had a severe negative impact on that. We did data calls following that to over 200 insurers, reported $3.5 billion in insured losses. As of the end of last year, already about 80% of that had been paid out, with the remaining portion mostly in the commercial property insurance market. We are going to get updated numbers here for as of June. We're just getting that finalized soon. And then, we're still kind of in the after effects of that, like how that's going to impact our insurance market. Some insurers have taken more of a broader look at these high risk areas now and are making some decisions to pull back. The good news is Hawaii's, at least for our single family home market, is still a competitive market. We have a fair number of insurers that are willing to pick up that risk if another insurer decides to non-renew, but we are monitoring that very closely. That is a significant concern. To be honest, still our hurricane risk is probably the biggest driver of potential pullouts or restructuring. I think many insurers are just looking at concentration of risks too, following this Lahaina disaster. If we can go to the next slide. So I guess I was asked to kind of give an update on what took place during our last legislative session. So Hawaii's legislature meets every year from the middle of January through the end of April. Last year there was a big push to start trying to address some of our, I guess, mitigation needs. One, and I do have a future slide on this, but a new office was created called, which is staffed by the Hawaii State Fire Marshal now. So that role had been unfilled, or they had done away with a Hawaii fire marshal for like the last 46 years. And so now they've added that back in. From our department, we did introduce a bill similar to what we see in quite a few other states, Alabama being the first with their fortify homes. We tried to introduce a bill like that as well, to set up a program to encourage homeowners to harden their roofs. But unfortunately, that did not pass at this time. And as many of you may know, sometimes it takes many sessions to get something passed through. I think there was a lot of economic uncertainty as well, with what's going on the federal level, and uncertainty about trying to establish and provide funding for that type of program. So we're continuing to explore that, and looking at other ways that we can encourage building a more resilient Hawaii. One legislation that did pass as it relates to property insurance is a bill that is, I'll touch on it a little bit more in another slide, but there was a bill that passed to sort of expand the authority of our FAIR plan. We have two, and that's kind of the third bullet point there. And they both originate from different needs. So the Hawaii Hurricane Relief Fund, or HHRF, that was actually created back in following Hurricane Iniki. That was in 1992. At that time, we experienced, that's the last time that we experienced a major hurricane damage. And at that time, all the insurers were providing hurricane insurance pulled out of the state. So the state itself set up this plan to begin offering coverage to homeowners so that they did not get foreclosed on by their mortgage lenders. That was active for about 7-8 years, issuing policies, and until the private market came back, and then essentially the policies that were in force in that FAIR plan went over to a private carrier, and the fund went dormant. And then HPIA, or Hawaii Property Insurance Association, was created originally because another, natural threat that we experience is on our island of Hawaii is an active volcano. So there were homes that were destroyed, and insurers no longer wanted to provide insurance. As you may or may not be aware, there's not much you can do to mitigate against a lava. If it's coming in your path, there's no getting out of it. So this plan will provide some basic fire coverage to homes in that area. And since that inception, they've sort of had to expand their authority to provide for other homes that are having difficulty also getting insurance. That has grown, but still not very significant. Again, we still have a fairly, competitive market, but there is concerns that will continue to grow. The reason why I'm talking about these, though, is it was related to our condominium market. So the legislation that was passed is focusing on a few things. One, providing more insurance market capacity by expanding those two entities. And then inside that bill is a loan program for condominiums to essentially do the mitigation work that they need to make themselves more insurable. Unfortunately, we have many condominium association buildings that were built pre-1980. They don't have sprinkler systems. They haven't been keeping up with their deferred maintenance. So this is just providing a loan, program for them to be able to start making those repairs. Lastly, just want to touch on, because this is kind of, we're still kind of waiting to see what the fallout is on this, but the Hawaii Supreme Court just recently upheld a $4 billion wildfire settlement. The electric company and various landowners were held, I wouldn't say they were held responsible, but they were the ones being, potentially sued as the party responsible for contributing towards the Maui wildfires. They've agreed to a settlement, but in doing that, the Supreme Court essentially disallowed insurers from filing separate lawsuits against those third parties, typically known as subrogation. So we are going to start seeing, I think, insurers adjust their rates accordingly if they know they can't directly subrogate. And so that's a concern. If we can go to the next slide. Yeah, so this is just even though it's not our area, I thought I would highlight as it relates to the creation of the state fire marshal. So as I mentioned, it was reestablished. It's now housed in this new department called the Department of Law Enforcement. And we expect that now there's more attention on this, that this will have a broader impact throughout our state in working towards more fire prevention and resiliency and management efforts of the surrounding areas, which as a byproduct will make properties more insurable. So we're all for trying to build this up. Yeah, so our Dory Booth here was just appointed as the state fire marshal, so she has quite a big task ahead of her. If we can go to the next slide. And then this is kind of touching on, that FAIR plan. And I just kind of want to give an example of what we've been dealing with as it relates to the reinsurance market and for the condominium association. So on average, in 1 year, many of our associations saw an increase in their commercial property insurance. So that's for the master policy, not the individual units, of anywhere from 300 to 500% increase in 1 year. An extreme example of that, there's a condominium association that we became aware of that in 2023, their master policy cost them $390,000, and then it's spread out to each of the units. That $390,000 went to $3.2 million the next year. So this obviously created and they weren't alone. There were others that experienced significant increases. So this obviously triggered, this is what we've been focusing on. The governor created a task force along with the legislature. We tried to get something passed in the 2024 legislature. It failed at the final moments. But we were successful in getting something passed in the 2025 legislature. And this is already having benefits. So during this process, the governor issued an emergency proclamation, which had given the authority for HHRF to come out of dormancy and to begin to explore issuing policies to condominium associations for their hurricane risk. The hurricane risk probably makes up about 40% of their total premiums. And in addition, I don't want to neglect, HPIA is also working towards getting active, but they're not active yet. And there's various reasons for that, but they're looking to get active by, start issuing policies by the fourth quarter of this year. But the HHRF has now gone live. It started issuing policies on June 24th. And we're already seeing significant savings for those associations who can get a portion of their coverage through either a portion or the remaining portion of their coverage through the HHRF for their hurricane coverage. And either it's getting it directly from the HHRF itself, or what's happening is our surplus lines insurers are bringing their rates down to compete with the HHRF. And in an ideal world, that's even better for the state. The state's not taking on the risk, but the consumers are still seeing the same, if not better, price impact due to the competitive pressure of the state stepping in and providing this coverage. I don't want to get too into the weeds of the details. It's not a first dollar policy. A building must already obtain 10 million of their coverage from either from an admitted carrier or a surplus lines carrier, and then it can get up to an additional 90 million from the HHRF. And then if we have buildings that are valued well above that, and then they just have to go to surplus lines market for the remaining. Where I said earlier that our homeowners market is quite competitive, unfortunately on our condominium association market, it's not. We only have 3 admitted insurers, and many of them place caps on the amount that they're willing to even write on a single building. And that's kind of where the 10 million comes into play. There's two of those 3 insurers have caps that go either 10 million or 25 million. And we have multi-million, hundreds of millions of dollars of buildings that they just couldn't get their full coverage. And that was causing, obviously, massive concerns. Anybody who's trying to refinance or sell their unit, they would have to find an all-cash buyer because mortgage lenders wouldn't lend to these building units in these buildings if they didn't have full coverage, because they couldn't sell the loans to Fannie Mae and Freddie Mac. I think next slide, that might have been the final one. Mahalo, that's our Hawaiian word for thank you. And I'm available for if you have any questions at all.
We are going to open it to the council for questions. Any questions online from any of the council members? Any questions in the room? Yes.
Just a quick question. Thanks so much, Jerry. Would you be able to share how HHRF is funded?
Yeah, good question. So initially back in '92, I think there was some seed money from the legislature. I want to say like 5 or 10 million, again, over 30 years ago. And then as it was issuing policies and collecting premiums and then had no claim event, they did, build up quite a bit of surplus in that account. When it went dormant, the fund actually stayed intact, specifically for that, if there was a future need to where the fund had to be reactivated to begin providing hurricane insurance again, that it could be met. So at this time, it had 175 million in the fund. We've been able to leverage that capital to purchase reinsurance, to get the program up and running. We're using a fully outsourced model of where we've hired 2 insurers to be the front end servicers. We have a back office administrator, and then we have claims TPAs essentially on under contract should we have a claim event. Part of this process of and literally the board was reconstituted in August of 2024, had to go through some statutory duties, is subject to our sunshine laws. So, it was a little bit of a challenge to be expedient, but from the time that we began meeting in like beginning of September to, 9 months, 10 months later, we've now have a policy on the market. So, it's a testament to the board itself, and then as well as, the board had hired Aon Consulting to help facilitate the relaunch. And that was, their efforts were quite tremendous in getting us launched as quickly as we could. And I'll just touch on one other thing. I mean, you know, there were different considerations based on the amount of funds that we had on where the coverage point would attach, and you know how much coverage we would offer. And to be honest, there was just a lot of uncertainty on what the demand would be, how much savings would the HHRF provide. That was a difficult thing to discern because again, we would be competing against the surplus lines market. So it was difficult for us. They don't have to file their product or their rates with us. So, but so far it's been a tremendous success. I would say the uptick is about where we expected. And if it kind of continues along that trend, then I think we'll probably increase the amount that we'll be able to go up to. Right now it's an additional 90 million. I can see that doubling. But again, it's still very early. Most times buildings, you know, they buy a policy for a year, and so they won't be coming to the HHRF until, you know, the following months coming up.
Any other questions? Thank you, Terry, for taking the time to meet with us today, especially with the time difference, and look forward to seeing you in Minneapolis next week.
Yeah, that would be great. Thank you.
All right, we're going to move along to our next presenter, Karen Collins. She's with the American Property Casualty Insurance Association, or APCIA. Thank you, Karen. If you want to introduce yourself and you can start your presentation.
Great. Thank you so much. Hopefully you can hear me okay. Yes, Karen Collins. I serve as Vice President of Property and Environmental here at APCIA. I'm a colleague of Laura Curtis, who currently also does serve on the council but couldn't join us today. Next slide. For those that may not be fully familiar, just a quick overview. We're a trade association that does represent home, auto, and business insurers with a presence across the U.S. And our goal is to protect people and help them recover from losses. I am going to today cover the current state of insurance markets across the U.S. to give you some insight on what is going on, as well as share insights on how the peril of fire has actually been evolving amid increasing wildfire risk and losses. And then at the end, I'm going to talk more on the solutions that we've been exploring and working to address the issues. So next slide. We're going to start out with the current state of the market and go ahead and just keep continuing. I'm going to probably move through these pretty quickly, so thank you to whoever's helping advancing these. So right off the bat, we as an industry, we're definitely seeing a lot more attention as housing affordability is at its worst level since the 1980s. And coincidentally, or not coincidentally, really the last time that the US economy experienced record inflation and high interest rates. Next slide. Now, homeowners insurance typically has only relatively been a small percentage of overall cost of home ownership, really slightly more than home maintenance, but much less than what we've seen with escalating costs of property taxes and mortgages. Obviously, these insurance costs have been going up significantly, and the big question is, what is driving this? So I'm going to dig into those. Next slide. So insured losses in the US have been rapidly escalating from a combination of factors. This includes record inflation, demographic shifts, economic growth, and obviously increasing natural catastrophes. Insurance in its most fundamental form is just a pass-through of all of these rising costs. So when losses go up, rates have to go up. Kind of like the stock market, the insurance industry, we are notoriously cyclical. We go through hard and soft markets. So if losses surge faster than the rates, insurers risk not having enough capital to meet the increasing coverage demands. And then affordability challenges can actually transform into availability crises, which is what we're kind of seeing in some markets. We refer to that as the hard market. So when you look at the left graph, it shows the net underwriting of the entire property casualty insurance industry over the last decade. This is basically how much the insurance industry takes in versus what we're paying out in claims and expenses for all the different lines. And it shows a $47 billion cumulative loss over that decade. Now, we fortunately saw results improve in the last year, 2024, but not enough to really fully offset these steep losses in the last few years. In the chart on the right, those upper three lines, those top three lines represent life insurance, commercial, and health insurance sectors. Those have actually all been profitable. But that blue line that's going deeply into loss territory is our personal lines, that which includes home insurance and auto insurance. And these are the lines that have been losing the most money. Next slide. So warning about the loss trends, in 2022, independent ratings agency AM Best, for the first time in history, downgraded from stable to negative the entire personal lines home and auto insurance sector. They warned that the personal lines insurance industry had lost tens of billions of dollars in each of the last 3 years at that time, including the worst 3-year stretch of losses in recent memory for auto insurers and 5 years of consecutive underwriting losses for homeowners. Now, just last December, we did see AM Best finally upgrade the personal auto line back to stable, but their outlook on homeowners is actually still negative. Next slide. The latest data from the NAIC indicates that Arizona has also had significant losses in the last 5 years, resulting in overall underwriting losses, particularly when you look at property lines such as homeowners and commercial. So homeowners in Arizona, the last 3 years in a row with the most recent data ending through 2023 have been losses. Next slide. So in many states, we have seen markets contract and coverage has been less available. This has caused an availability crisis for property insurance, but it's not a longer-term insurability crisis as we've often seen reported in the media. Next slide. So there's 3 tiers of cost drivers escalating property insurance losses specifically. We had macroeconomic pressures from community and economic growth, and severe inflation for the building materials and labor to replace and rebuild property. We also have climate pressures from demographic shifts with more people moving into larger and more expensive buildings in areas that are prone to disasters such as hurricanes, wildfire, and flood across the US. And state governments can sometimes also amplify some of these cost pressures by increasing coverage mandates or suppressing rates or enabling legal system abuse. Next slide. The left graph shows the increase in global natural catastrophe losses, which have doubled roughly over the last decade. Unfortunately, in the last 5 years, the losses in the US have accounted for 73% of all of those global nat cat losses. And the right graph shows the increase in the cost of replacing all the structures in the US, which also has more than doubled over the last decade. So again, we're experiencing more severe events, but there's simply more and much larger properties that are in the path of these disasters, which are increasingly expensive to replace. Next slide. Here you can see the impact of natural catastrophes in the US specifically, which, as I mentioned, have surged. We have seen a lot of severe storms, severe convective storms that produce tornadoes, hail, and strong wind. I know Arizona is prone to some of these, along with hurricanes and wildfire. Of course, Arizona has the wildfire risk. These collectively have been top drivers of natural disasters across the US. And even just this year, we've already incurred $92 billion in insured natural catastrophe losses just in the first half, far outpacing other recent years. Next slide. So following these events, again, persistent inflation has been a big cost driver that's made the cost to repair and reconstruct homes significantly higher. Here it shows the cumulative effect of inflation since the COVID-19 pandemic on residential construction and other cost input. Early on, we actually saw construction materials and labor surge upwards of 40, if not up to 60% in those initial couple years. Now, fortunately, we've seen trends normalized, but they're still up 40% cumulatively, which is really affecting the cost for every type of property loss in the claims. Insurance is a lagging indicator, meaning premiums do take a year or two to catch up to the trends. This is why we're seeing insurance costs surging across the US in the last couple of years to close that gap between loss costs and the prices being charged. Now, for a lot of companies, that gap actually led to an erosion of surplus capital. If you think of surplus capital like your savings account that companies maintain so they can pay future claims. And insurers are actually required to maintain adequate levels of surplus capital. So for some companies that experience much greater reductions in their capital, we had seen in some cases in the Southeast several insolvencies after hurricanes. And across the US, we actually saw a number of companies experience financial rating downgrades from companies like AM Best until those companies can restore their capital to more adequate levels. Next slide. Now, complicating these challenges, our industry has also seen much more frequent litigation and outsized jury verdicts, which is also amplifying costs across all lines of business. Just to give you an example, this is the median personal injury judgments, which have tripled over the last decade, which has concerning liability implications under personal property lines as well. So while we know that state policymakers can't fix weather or inflation, this is an area that we have often looked at as reducing legal system abuse and other regulatory costs in many states. Next slide. So also we are concerned about the cost of capital, which as was mentioned, reinsurance. These are costs that have similarly increased for insurers. To help absorb really large natural disaster losses, insurance companies do need to purchase risk transfer. Reinsurance is one of those types of capital they can obtain. It's like insurance for insurance companies. And because that industry has faced significant losses because of all these global disasters, they have similarly raised their rates. And what you can see here since 2017, the Guy Carpenter U.S. Property Catastrophe Rate Online Index has more than doubled, and it saw its largest jump in 2023. Next slide. So these cost factors have resulted in insurers needing to make adjustments to manage the capital they have, which has often been through stricter underwriting, temporary pullback, and other efforts like mitigation to reduce preventable losses. And we're seeing these actions happening across the entire US. Now, overall, the market crisis is a simple demand and supply imbalance. Historically, again, we've gone through these as market cycles before, but historically, as the gap between losses and the price of insurance is closed, we see availability issues ease. But it's affordability that becomes that longer term issue. Next slide. So in Western states, we are facing those same challenges, but there are some other unique issues. The peril of fire itself is evolving, making it a very volatile peril. So here on this slide, you see across the US, we're seeing weather whiplash, changing environmental conditions that are simply more conducive to fire ignitions and spread, like extreme rainfall events, intense heat, and prolonged dry spells that are all setting the stage for wildfire. Next slide. We're also seeing community growth exploding in fire-prone regions, and much more than other risk-prone regions across the US, and by a large margin, as you can see here. Next slide. So this is contributing to much larger and costlier wildfires. Here you can see the global insured wildfire losses in the last decade were more than 5 times higher than prior decades, largely driven by those fires in California. But you can see we have 8 of the top 10 costliest insured wildfires in the world have all occurred in the US just since 2017. Next slide. But these issues are not isolated to California, as we're seeing a growing number of conflagration fires across multiple Western states during high wind events, resulting in the costliest and unfortunately the deadliest losses in history in recent years. This shows you essentially a top 20 of the most expensive fires globally, focusing on just the fires here in the US, ranked by those insured losses specifically. Next slide. So wildfire is unique in that losses are not limited to Mother Nature like other perils, which is adding to the volatility. We're seeing a growing number of utility-involved ignitions across Western states during these high wind events, leading to these really significant fires. In fact, those shaded in orange are those that have been caused by a utility-involved ignition. Now, what we've seen in all of these charts for wildfire losses is that the trends are climbing sharply higher. Next slide. So to better understand risk and really to determine what level of exposure insurers can responsibly assume without risking insolvency, they do need to look at extensive data. And with more data available and advancements in technology and analytics, catastrophe models specifically have become increasingly critical as a tool to manage risk as our industry faces more climate-intensified loss events. Next slide. Catastrophe models, for those who are not familiar, are simply a financial tool designed to help quantify the financial impact of a range of potential future disasters, really by informing where future events are likely to occur and how intense they are going to be. Next slide. They provide a more comprehensive understanding of risks and potential losses associated with different catastrophes, enabling more accurate pricing and risk selection, most fundamentally to ensure the financial stability of the company, but also to protect policyholders following a disaster. They're critical in effectively managing overall portfolios, including identifying areas within portfolios that companies maybe are over-concentrated and therefore need to take steps to mitigate excess risk, whether they buy more risk transfer or through mitigation or other actions. Next slide. So to support all of this, there's actually multiple types of catastrophe models. There are risk aggregation models to help with broader portfolio management, as well as risk segmentation models that focus on the individual risk assessment and pricing. So aggregate models help insurers understand that cumulative risk across their entire portfolio to really help inform the total rate that they need to cover all potential losses across all lines. Now, in contrast, those risk segmentation models look more closely at the individual property factors that might lead to a loss or influence the severity of that loss, meaning how much damage will it sustain. And these models then help inform the premium that should be charged for each property individually. Next slide. So wildfire cat models, they look at a lot of different factors like the interactions between weather, local vegetation, topography, and also the catalogs of historical fire footprints. These models might also consider community and parcel specific factors such as defensible space and construction materials. They often may leverage aerial imagery like satellites to help assess roof condition or maybe the vegetation adjacent to a home, or even other data records to verify a building's features that you can't see from above, like that siding material or type of windows and if eaves and vents are enclosed. While these models do differ, this is just giving you an example of the various factors that many wildfire models might consider. Next slide. So these data inputs collectively contribute to a risk score, how your home is constructed and its proximity to where fire is more likely to originate and spread, and these are going to vary. So homes that are on the same street might have different risk scores. Risk scores could also vary by catastrophe model for the same property based on the model's inputs, sources of the data it pulls from, and how the model itself is designed. But what's important to understand is a wildfire risk score is really just one of numerous factors that insurers consider when they're underwriting and pricing. And even the extent that that risk score is relied upon versus other rating factors is going to vary. So for example, some companies that may have a stronger financial position to assume more risk in their portfolio, they might choose to accept properties with higher risk scores than maybe other companies. Next slide. Solvency risk is really what precipitated the development of the cat modeling industry many years ago and remains a key reason that these tools are so critical today, particularly in the wildfire space. We have seen as an industry following the 2018 Camp Fire in California, unfortunately, there was a company that became insolvent. It was a 100-year-old small regional carrier that was unfortunately overexposed due to their high concentration of homes in inland rural areas of the state. Just this year, the largest homeowners in California is unfortunately in financial distress after the LA fires. They had actually recognized they were overexposed, so just months before the fires, reports indicated they were taking steps to de-risk by non-renewing a large number of policies in some of their highest risk areas. Unfortunately, they weren't able to complete that in time, and it really, the loss of that fire threatened their potential solvency, and they had to arrange a capital infusion from a parent company and work with the Department of Insurance in California for an emergency rate increase to help stabilize. And we've also seen the LA fires create losses that exceeded the claims paying capacity of the state's residual market plan, the California Fair Plan. And that led to a $1 billion assessment that got applied to all the private insurers operating in that state. So these are issues specific to California. We do have some unique regulatory challenges that we face with delayed rate increases and limited use of CAP models that are contributing factors. I just want to flag that as a nuance unique to California. But if you go to the next slide, we do still know that the impacts that we're seeing across all these states, that it really underscores the importance of having models to ensure adequate capital to pay for these very, very high severity events. Insurance, many don't think about, but it's uniquely different than most other products that consumers buy. because it's priced on the probability of an event that may or may not occur in that policy period. So unlike FEMA or maybe our National Flood Insurance Program, which may be able to get a federal bailout, if private insurers underestimate their potential losses, they risk insolvency. And media coverage that we've seen from the LA fires has suggested that this event, it actually was accounted for in models. It was just described as a tail event, meaning CAP models recognized it in that area at that magnitude being possible, though it's an extreme scenario. And so we are now seeing the industry recognizing that models may need to steepen those tails, meaning increasing the probability of that type of scale of loss reoccurring. Next slide. There's also, from this particular company, they noted the impact on severity from the value of property, demand surge impacts, additional living expenses, and also smoke have all also contributed. We're seeing more of this in more of these fires, and that ties to that lower corner of the wheel. The aftermath of these conflagration fires are just uniquely more challenging versus other perils. We've seen data in California that shows that over 90% of homes that ignite in a wildfire are a total loss. They don't partially burn, they are completely gone. And that results in very high loss severity due to the loss of the structure, all of the personal property inside, and even the intensity of the fire may compromise foundations and retaining walls. That all leads to a lengthier debris removal and environmental cleanup process prior reconstruction. And it also adds to the amount of living expenses while people are out of their home. With other disasters, whether it's tornadoes or hurricanes or others, maybe only part of the home is damaged and a temporary repair can allow you to move back in while you do other repairs. So we've seen in our Western states, these challenges following these fires have led to various legislation, and they are intended to help provide consumers with more coverage benefits and lengthier timeframes in the recovery process itself. Very well intentioned, though that broadening of coverage creates higher costs and again, volatility on the peril of fire and how insurers need to model and price the risk itself. Next slide. So that's an overview of the challenges with the peril of fire, but I want to talk through some of the solutions. So the reality is affordability and availability challenges, they're very connected, but they're uniquely different issues that require different solutions. I've described the increasing exposure and costs that we're seeing from economic factors, growth and environmental conditions, though insurers are working to adapt to the broadening of the fire peril itself with these higher minimum coverage benefits, timeframes, and in some states, the type of losses that might need to be paid for under the policy. We're seeing more with distant smoke and mudslides as well. So we've seen capacity challenges in a number of states. They've eased where rates are catching up, fortunately, which is why we believe that it is not an insurability issue, but rather it's really the affordability. What we've seen in other Western states, though, is that many policy proposals that have been getting introduced in Western states are adding to new or higher exposure and costs, including regulatory compliance burdens or constraints in that ability to manage exposure. For example, in response to these underwriting and pricing actions that we've seen from companies, several states have considered constraints on catastrophe models, including requiring mandatory disclosures or maybe appeals processes related to risk scores. These are actually very costly and complex changes to operationalize. We've seen laws enacted that allow for moratoriums temporarily after particular disasters. This leads to greater uncertainty in the ability for a company to manage exposure, which can inadvertently contribute to companies maybe pulling back. And in turn, this has led some states to consider establishing new or expanded residual markets, or in some cases, reinsurance risk pools. Now, unfortunately, those programs don't really address the underlying issues in market disruption, and so they tend to lead to other unintended consequences, things like moral hazard and increased exposure from the assessments that might be placed on insurance companies. With state-based reinsurance risk pools, we've seen some consider that, but that's actually counter to the fundamentals of the purpose of reinsurance, which is to spread risk and diversify it among global capital markets. And so these pools tend to concentrate risk locally, so it's not really an ideal solution either. Instead, what we think are the best solutions are policymakers should focus on programs that really address the underlying costs themselves, and that's where the benefit of mitigation is such a huge conversation piece. So I'll touch on just a few more on mitigation, then I will wrap up. So we understand on the next slide, for homes that are mitigated to be more resilient, this is what allows them to survive and improves that insurability. And so we are working across federal and state with legislators and agencies to really support all of the different mitigation and resiliency programs. And I'm going to go through these really quick. So the next slide is the one for IBHS. And I know that Michael Neiman's on your council, so I won't spend a lot of time here, but we strongly support IBHS. The insurance industry is very supportive of the wildfire prepared home that's been launched in California and is spreading into many other states, with the core issues in brown for actions and optional features in blue listed. The next slide shows their new wildfire prepared neighborhood program that's being piloted in Southern California right now and is looking to expand. The next slide gives you kind of an overview, is that we would like to see broader stakeholder alignment on all of these solutions, really focused on the science, rooted in the science. This is any land use policies and building codes, really we want rooted in that. We also want states and communities to have a data-driven approach to really how they're communicating risk and resources to support community action, and also working on utility equipment strengthening. The next slide is one that I'm highlighting for states just because of confusion on the differences in roles of public wildfire hazard maps versus risk models. We know that a hazard is anything that can cause harm, but risk specifically considers that chance or likelihood a hazard will cause harm in addition to the extent of damage that'll result. So what we've seen with hazard maps, these are developed and used by policymakers, critical to informing land use decisions and building codes, as well as hazard disclosures and other allocation of resources. That's for them to better manage state and government policies related to wildfire. With insurance, they use the risk models, which are more granular. They have more frequently changing updates to things like the fuel load and vegetation, and it's really meant to inform the extent of potential loss that can occur in a policy term for individual insurers. So we support states developing the hazard maps, and it's critical to understand that those don't actually influence the insurance rates or coverage decisions, and that's been some confusion in media coverage on those. Lastly, or just a couple last things, financial incentives. We do strongly support a wide variety of incentives, grants, low interest loans, waiving or reducing fees, tax credits, all of that. And then the next slide is just some of the discounts and how they're being done in California and some other states. What we stress, and this is kind of the challenge for insurers, is that the science shows wildfire mitigation needs to do a set of actions taken together to really meaningfully reduce risk. And again, unique to wildfire, it's got to include defensible space that's ongoing, and it's got to be community scale. And so all of that makes it a little bit more complicated and challenging for insurance companies and how they're going to validate that to in turn model and provide an appropriate risk-based discount. So you're seeing discounts being introduced, but they're a little bit challenging and they're really small in the value initially until we have more data and more examples of how they're performing over time. And then lastly, this slide is a recent action from the National Conference of Insurance Legislatures on supporting catastrophe savings accounts. For those that are unfamiliar, they're kind of like a 401k account that allows contributions to be made on a pre-tax basis, but they're allowing these in many states to be done for mitigation-related, disaster-related costs and expenses. So we're seeing some momentum around that. And so the last slide, my closing, I just want to acknowledge the time. I know that we're seeing a lot of economic pressures with higher costs, and companies are in a cycle right now where they're having to adjust capital to account for that higher potential loss. In some cases, de-risking or doing tighter underwriting or pullback until they can get back to that place of financial strength to lean in. But again, not a long-term availability issue. It's more of a near-term cycle, but the affordability is really that longer-term issue that we want to see states really focus on. And we're here to support you in what we can do to help with that. And I included a last slide that is just more research papers if anybody wants to learn more, but I know this was a lot.
Thank you, Karen. I know we started a little late, so I'm just going to allow a couple minutes for questions from the council. Jacob?
But just a quick one. I think it was on, and Karen, thank you so much for the presentation. I think it was on slide 65. You kind of mentioned how mandatory disclosures of risk scores impact costs. I was just wondering, you know, in a state with those risk disclosure requirements, how much of a premium can be accounted for by these mandates?
We have actually struggled to quantify that because each company's size is so different in how that actually impacts them individually. But there is substantial cost from operationalizing the risk scores. Anytime you add a new form that has to be populated with something that's like a dynamic, a changing value that's unique to an individual property, that's costly IT programming. There's also sales and servicing staff that have to go through training to kind of be able to educate on that. And then there's also a lot of these appeals processes that we've seen, and that's an entirely new function that then has to be stood up within a company. And so all of that adds a significant price tag. What we have encouraged states is if they're going to do any sort of disclosure is to keep it more of a higher level that can be maybe reused for many types of properties, kind of describing categories of risk instead of individual, so detailed specific on each property individually. California was the first to kind of roll out requirements for that. And we saw some companies that were smaller that just don't have the scale to absorb some of all of that process in its entirety. And we lost some companies, like they ended up leaving the marketplace because of that being one of the reasons, the regulatory compliance burden. So we've tried to work with other states to strike a little bit more of a balance in the flexibility and how that is done, just so that we don't have that unintended consequence of reducing competition in the marketplace with having more companies of all different scales and size that can provide that.
Any other questions? Tom?
Karen, thank you. I need to study all the stuff you gave us. That's a lot. So I really appreciate it. But I think I heard you mention that the insurers want to put a focus on those mitigation measures. And that's one of the things we've talked a lot, we've heard a lot about as the council. I wonder if you could talk a little bit more about how those mitigation measures might be accepted and how they would be accepted and what we can do as a state to sort of maximize those mitigations that matter to insurance companies. Can you comment on that?
Absolutely. So insurers, they have, well, obviously you've got Michael Newman on the council, you've heard from IBHS. We are looking for the evidence-based actions that are truly going to meaningfully reduce risk. We've seen states in the past that were like, let's mandate discounts. We want to make it more affordable, but when they're not rooted in what's truly going to reduce losses, they can actually create more harm in the marketplace. I could give you a deep dive on Florida and how that happened in the aftermath of hurricanes in the early 2000s. So as an industry, we're very focused on what is the science behind it. And that's why we support the Wildfire Prepared Home Program. What we've seen in California is that some companies that are in a financial position to do this with high risk properties is that if they see a property that's achieved the Wildfire Prepared Home designation in their state, they will guarantee acceptance on that. Now that's an individual business decision. We have seen a similar approach taken in Colorado. They have their wildfire defense, wildfire partners, I think, program in Colorado that does essentially defensible stuff that's consistent with some of that. And we've seen companies in the past say that if you've done this and you have that certificate, we will guarantee acceptance. Obviously, as long as there's not other issues like fraud or misrepresentation, but like based on that, they will accept it. Now that's individual business decision based on what their current capacity with capital and appetite is. From a discount perspective, we're seeing more companies that, again, they're going to maybe consider offering a reduced price through a discount or through the rating factors if you've seen that risk reduction implemented. We're still early in a lot of the data collection. Like when you look at 2017, that was kind of the tipping point of all these losses. So we now have the science and we have this program from IBHS, but it's really only been implemented in the last few years. We haven't had a lot of losses to really measure how have those done. We know what it is in a laboratory, and we're doing kind of after every major disaster, a post-disaster look of like which properties survived. So we have a good directional, like this is very beneficial, but the quantifying of what each action is, like there's still need for more credible, larger data sets. So that the discounts are still kind of small in that sense, but we know it's impactful. And we know that the most meaningful actions is when you do this kind of minimum set together. So insurance companies are looking at that just because it's rooted in science. It's been tested and put not just in a laboratory, but in practice, what we've seen in the aftermath. And so not to say companies may look at other things, but generally as an industry, that's the kind of the gold standard that we're looking at is for that particular program that's rooted in that science-based framework.
Thanks, Karen. All right, we're going to move on to our next presenter. We're lucky enough, and again, he's doing this and East Coast time, I believe, so thank you. We're going to hear from the Alabama Department of Insurance and their programs that they have. I know a couple of Karen's slides actually referenced Alabama, but we have Travis Taylor. And Travis, if you can introduce yourself and you can start your presentation.
Sure. Everybody hear me okay?
Yes, thank you.
Perfect. Again, my name is Travis Taylor. I'm the director of the Office of Risk and Resilience for the Alabama Department of Insurance. And within the office, we manage our Strengthen Alabama Homes program. And you can go on to the next slide. We developed, this is Mark Fowler. He is our commissioner. Mark was instrumental in his early days in our department in developing our program. You can go to the next slide. And this is kind of the overall, as you guys can see, the mission of our Department of Insurance, but ultimately the mission, purpose, and the mission of Strength Alabama Homes is we serve and protect the people of Alabama, just like each one of you guys do in your respective states. Our goals are the same. We protect our citizens. Strength Alabama Homes was established through our legislature to establish and reduce the risk of loss due to high winds and storms using the IBHS standard fortified for roofs. And then our mission is we provide grants to homeowners to retrofit their houses to become more resilient in the case of bad weather. Next slide. This is kind of where we are to date. We budget about $17 million. We plan to do this year. We're on a fiscal year, so our year ends in another couple of months. We're on pace to do 1,700 roofs this year. We've done just over 9,300 year to date. No, I'm sorry, from the inception of the program. And we've done just shy of 91 million in the program. And for FY27, starting October 1 of this year, we plan to do another 17 million in roughly the same amount of roofs for next year. Next slide. Well, and I'll kind of stop right here. Before I get into these special projects, the Strength Alabama Homes program was really founded. Commissioner Jim Ridling, who was Commissioner Fowler's predecessor, who was a longtime insurance executive, understood that if you didn't change the economics after a storm, nothing else would happen. You're not going to do anything different. And we all know the definition of insanity is doing the same thing over and over, expecting something different to happen. And unfortunately, the Gulf states, we experienced these hurricanes and we just continue to rebuild and do the same things. Now, on the heels of Hurricane Ivan, 2004, and Katrina in 2005, two of the most devastating hurricanes that have ever hit the Gulf Coast, we had to do something different. And in 2011, we did our first legislation to get passed. And I want to back up just for a second for the folks in Hawaii, the folks in Arizona, California is just working on some legislation. I applaud you folks because it's not easy. It's very disheartening when it fails because we all know how much it is needed for mitigation programs and things like that. What seems to be no-brainers sometimes gets caught up in the political realm. And that's unfortunate, but we have to keep pushing through. And just personally, I was out in California a couple of weeks ago and got to visit the Palisades fire damage. And I will tell you, I have not seen anything like it, and since my tours of duty in Afghanistan and some places in the desert. It was absolutely some of the most devastating stuff I'd ever seen. So I will tell you, even though we fight the hurricanes and tornadoes here, you guys have your own problem. And wildfires are, as I like to say, and I've said it before, wildfires and Mother Nature itself is undefeated. Water is undefeated. If it were not for the heroic efforts of the firefighters, not only in Arizona, but in California as well, the devastation would have been much, much worse. But water goes where it wants to go. Fire goes where it wants to go. Ultimately, what defeated the fires is the water. You know, it got to the ocean. For us, the hurricane storm surge is, you can't stop it. You know, our goals is to hope to, on the peripheries, be able to help people get back to life quickly as they can. Because some of these things are just so unbelievable that, you know, being in the path of an F5 tornado, in the straight path, being in the straight path of a Cat 5 hurricane, directly in the path of a wildfire, like I saw in the Palisades with the 90-mile-an-hour winds you guys were facing. Unbelievable. I mean, there's no getting out of the way. The best thing you can do is be prepared as you can. So, again, television doesn't do it justice. And over in Alabama, we feel like we're a world away when you guys were going through some of the things you were. As similar to, I'm sure you see some of the things on the Weather Channel when the hurricanes we fight. But still, resiliency should be a nonpartisan, non-political thing that we all should do the best we can to get it done. And fortunately in Alabama, we got it done. And just quickly, we fund it every year, which is, and some of the presenters have touched on some of the funding aspects. We don't rely on the federal government for any of our funding. We use portions of our insurance fees and taxes that are collected throughout the year, and we're able to retain some of those within the department to fund our Strength Out of Homes program. We started off a couple $1 million. We had a few other organizations did some donations, but some of the folks that were around since the beginning will tell you they thought it was going to be a $2 or $3 million program. We've been at 16, 17, 18 $million over the last 5 years, and we have no intention of backing up. So a couple of special projects that we've done. Africa Town was down in on the coastal town in a small socioeconomically challenged neighborhood. We stepped in, we helped do some roofs there. Protecting Good in Birmingham with the city of Birmingham, the Habitat for Humanity, some other entities did some of the same things. In Selma, we stepped into a situation that some tornadoes came through and probably devastated. And Selma is, for those of you who don't know, it's kind of the birthplace of the civil rights movement, and is a hugely historical, but socioeconomically challenged area. And the town is divided up into somewhat what we call wards, very similar to New Orleans. But one ward in particular was completely devastated by a tornado that came through. And we were able to step in with the help of some other partners and build, but do 40 new routes for $400,000. We committed to this project. But it was really one of the most moving things I've ever been a part of. A lot of those families, those homes were generational homes that have been there for a long time. A lot of families with either one parent or no parents and were raised by grandmothers or grandfathers or aunts, uncles, you know, for them to have the ability, and many had told me, you know, you mean it's not going to rain in my house anymore? And those kind of things, you know, for me, I look for those opportunities to be able to do those kind of things for people. We have been very fortunate in Alabama that with our program and our donations, direct donations from other entities, we've been able to do the homes that we've done. And not only that, but be able to reach some of the really economically challenged people in our state. Next slide. This is just a synopsis of the Office of Risk and Resilience. Now, Strength Idaho Homes has been around for a while, but the Office of Risk and Resilience was formed in October of 23. And basically, we do not only the Strength Idaho Homes program, but we also, I'm the state floodplain administrator. We also do a lot of other anything resilience for us. We stay involved in. We have numerous projects throughout my staff. We have a Climate Resilience Council that's going to be codified next legislative session that will help take on, you know, statewide initiatives that are not only coastal issues for us, but smaller rural counties, rural water authorities, those kind of like places. We want to help just kind of streamline some of those processes to where we can all, you know, benefit when something happens, and be able to provide assistance. Next slide. Oh, and I'm sorry, that may be it, but I do want to say something really quick. I apologize. We were, and I believe Susan mentioned it, her comments about validation. One of the things for me, or two of the things for me for our fortified program, Hurricane Sally that came through, and I believe 2022, we did a data call for Hurricane Sally, and it was the first time that an actual, and this sounds bad, but we actually were able to test our product. And I say our product, but we were able to test the fortified program. It's the first time that a major hurricane came over a section of fortified homes. And I wish I would have had the picture, but I'm a very visual person. And I remember one of the first pictures that I saw, it was a street, there were about 15 houses, and it was an aerial photo. And how you could tell the homes that were fortified versus not fortified was there was a blue tarp on their house, a blue tarp on the roof. The losses were so significantly reduced because of the fortified homes that were in this impact area. So we validated. We've been preaching fortification for so many years, and unfortunately, we had to have a bad event to be able to test it, but we did that. And along those same lines, in the beginning of our legislation, we came up with discounts for the people that did the fortification process and to receive a discount on the wind portion of their premium. And we were, the numbers, and we've just gone through a benchmark study almost 10 years later to show that we're right on tap. So we validated our program two different ways. Number one, with the actual Hurricane Sally data call, that we know that it works. And number two, the benchmark study on the discounts, we know they're in line with what they need to be. So I apologize, I rushed through it, kind of an essence of time and everybody's time, but I'll be glad to have any questions or take any questions you guys have.
Thank you, Travis. That's very interesting. And I'm going to open it up for questions from the council. Any questions?
Just one.
Oh, good morning, Council.
So Travis, thank you for your presentation. So you mentioned that Alabama has stood up an Alabama Resilience Council. Our legislature and governor stood something up similar. They stood up a fire insurance review task force. And I'm thinking there might be some similarities there. Can you quickly comment about what the role of that Resilience Council is and what do y'all do?
Sure. We actually the Resiliency Council is co-chaired by our insurance commissioner Mark Fowler and our EMA director Jeff Smitherman, and we invite all of these outside agencies, Rural Water Association people, and really everybody from the different agencies within our state government. And what we want to do is really kind of streamline the whole process of recovering from disaster, making resilience efforts, and not only from the weather related, but this council is going to talk about, we're going to get involved with cyber attacks. There are some examples of some of these rural water in these small little towns, these small little water authorities. What happens if they get hit with a cyber attack? What can we do to help them? From not only from our headquarters in our state capital where we are, but what can we send in a team and get them back on track? Because these small towns that are very isolated, or these small communities that are isolated, we want to get them, because if they don't have water, they're in bad trouble. And our goal is to kind of streamline all the processes, get inputs, become more of a resource for not only the smaller communities, but everybody. Because unfortunately, just like you guys out west, we have our own share of perils. I mean, we have wildfires, nothing like the levels you guys have, because we don't have the winds, that you guys have that are in some of the vast spaces, and we get a lot more rain as well. But our hurricanes and our tornadoes and convective, we fight those every day. Those are everyday occurrences for us. And the great thing about our Resiliency Council is the fact that we are just trying to bring everybody into the loop where they don't feel isolated. And I think that's going to be a huge kudo to our council. And I think we're in good shape. We're going to, present the bill the first part of the session next year, and hopefully we're going to get some teeth to it to where we can get, as a byproduct, also a chief resiliency officer, which would be a state appointed person that'll work directly for the governor and hopefully for the insurance commissioner, and to kind of manage that whole process. But I think we're on our way to being really good.
Any other questions? Any questions online from any of the council members? All right, hearing none. Thank you again, Travis. I really appreciate it. I know you kind of got thrown into this at the last minute from Commissioner, so.
Hey, I'm used to it. He did that to me all the time.
Appreciate it, and hopefully I'll see you next week in Minneapolis.
Sounds good. Thank you, guys.
Thank you. All right, so at this point, we're going to open it up for any council remarks, discussion on anything that we saw or heard today, or any other matters.
Just like to make a comment. All the presentations today were fantastic. I learned a lot listening to all the different components, and obviously a common theme that we keep hearing is the IDHS stuff, which I think is fantastic. I know within the state, especially through the DFFA, we have some awesome funding sources for the ground level mitigation. But a common theme today was grant dollars for homeowners for fortified roofs in Alabama, other components, and I think that's something that we really need to think about within our built environment for the communities that already exist that might not be able to afford those dollars. And so just maybe a common theme that I think is
That's the goal. Anybody online, council members only, that might have a comment or discussion item before we start closing out? Anyone else in here? All right. No public comments in the room. Has anyone filled so? I think we just have time. How many do we have?
There's just one.
Okay, well, then, we'll go ahead and move into public comments. If, we just have the one, so I'm just going to, ask you to identify yourself and who you're representing. There will be no comments or answers or questions posed from the committee or council. So you can go ahead.
Leslie, you should be able to unmute yourself.
There we go. I think I got it. I'm
Okay.
Leslie Paulus, and I had actually been in conversation with Catherine O'Neill, who then forwarded me this meeting, which was great. The reason I contacted actually the governor, who then referred me to Catherine, was that we had, after 20 years of having a cabin, a second home that we have up in northern Arizona near Potato Patch, had farmers who also had all of our other bundled policies for Phoenix Home and vehicles of 30 years, just drop us. And they said, so sorry, there's nothing you can do. You know, you're in a high fire risk area. And even when I pointed out, we had about 12 years ago put on a metal roof. We had taken all of the siding and changed it to composite, or I should say the concrete siding, which is fairly fire stable. And we have at the end of our easement, we have a Walker subsidiary fire truck with pump and also a fire hydrant. And even with all that, they said, no way. And I said, well, what if we do the Firewise certificate program, which I'm in the process of doing now for our cabin? And they still said, no way. So then we called 16 different insurers, and they said, no way, even with the Firewise and all that additional information. So we finally did get a company that accepted us, American Summit, and we paid our money, and they were going to insure. It was written up to insure us at the same amount as farmers had been covering us for replacement, not, cost of how much you could sell it for. And they said, yes, we'll accept you. And then when we got the final papers back, it was half of what that amount was. And when our broker reached out to him, said, you accepted it for the original amount. And they said, well, we changed our mind. We're just doing it for that. And if you don't like it, you can leave. So I just wanted people to be aware. And that was the second time I heard that. I have another friend that has a mobile home that they just insured. And they also were only allowed, it wasn't the same company, but it seems to be a trend up north where they insure only for half. So there still are multiple issues, and this was a good program. I didn't know about the foam. Of course, rain comes and goes, and then you're going to have to repeat it. Doing the Firewise itself, my estimates came in at anywhere from like 15,000 to 19,000 for the 2.69 acres. And as the Firewise folks from Walker pointed out, even though they give you a certain amount of money, I think it's $2,300 per acre, you still have to pay it up front cash and then get reimbursed, and it doesn't cover it all. So not everybody can do that. So I don't, it's a significant crisis. And as I drive up every weekend to the cabin, we go pretty much every week. We see all sorts of forest land that is obviously not Firewise. And I'm just thinking to myself, what's being done about that?
So Leslie, we appreciate your comments. We will not be addressing any of your questions today, but we do appreciate you taking the time to comment. So with
Thank
that,
you.
I'm going to close the meeting. I just want to wrap up a couple things. Next month is our last meeting of this council. That will be September 10th at 1 o'clock. Same place, same time. We will continue to hear from our neighboring states and on some of the other efforts that are being done around strengthening homes and resiliency and mitigation. So with that, I'm going to officially close the meeting. Thank you all.